In this video, we'll explore how to build discipline like a pro investor. We'll discuss 5 actionable steps that can help you become more disciplined in your investing journey. Step no. 1 is to have a clear plan. You have probably heard of the quote, "A goal without a plan is just a wish." And I couldn't agree more. Having a clear plan or strategy is crucial for disciplined investing. Your strategy should include which coins you are going to buy and when, as well as the percentage of your portfolio you want to allocate to each coin and your time horizon. Without a clear plan, it's easy to make impulsive decisions and chase returns, which can lead to poor investment outcomes. A well-defined strategy helps you stay focused and avoid making emotional decisions. It also provides a roadmap for your investing journey and helps you track your progress over time. So take the time to develop a sound strategy that aligns with your financial goals and risk tolerance. This may involve conducting thorough research, seeking advice from financial professionals, and regularly reviewing and updating your plan as market conditions change. Remember that a good strategy is essential for long-term success in investing and that developing a plan takes time and effort. But the benefits of having a clear roadmap for your investing journey are well worth the investment. Step no. 2 is to automate your actions. Automation is a powerful tool that can help investors stay disciplined by removing the emotional component from their actions. When it comes to investing, emotions can often get in the way of making rational decisions. Fear and greed can cause investors to buy high and sell low, which is the opposite of what they should be doing. However, automation can help investors stay focused on their long-term goals and avoid making impulsive decisions. One way to automate your actions is by setting up recurring buys. By setting up recurring buys, you can invest a fixed amount of money at regular intervals, such as every month or quarter. This can help you stay consistent with your investing, even when you don't feel like it. It also allows you to take advantage of dollar-cost averaging, which is a strategy that involves investing a fixed amount of money at regular intervals regardless of the price of the asset. Another way to automate your actions is by using trackers. Trackers are essentially programs or apps that monitor your investments and alert you when it's time to rebalance your portfolio. Rebalancing is the process of adjusting the allocation of your portfolio back to your target asset mix. It's important to rebalance regularly because over time your investments will drift away from the target allocation. For example, if you have a portfolio that is 60 stocks and 40 bonds, but you only ever buy stocks, then over time your stock allocation will increase while your bond allocation will stay the same. This can create an imbalance in your portfolio and increase your risk. Trackers can help you stay on track by alerting you when it's time to rebalance. By automating these tasks, you can free up your time to focus on other aspects of your life. It can also help you stay disciplined and avoid making emotional decisions. Remember that staying disciplined is crucial for long-term success in investing. By automating your actions, you can stay focused on your goals and avoid the pitfalls of emotional investing. Stay disciplined like a pro investor by limiting your chart checks. It's easy to get caught up in the day-to-day fluctuations of the market. But it's important to remember that short-term price movements are often random and do reflect the underlying value of a coin. Constantly checking charts can lead to unnecessary stress and anxiety, which is not conducive to disciplined investing. Instead, you should set aside specific times to review your investments, such as once a week or once a month. This will allow you to monitor your investments without becoming overly fixated on short-term price movements. You can also set up alerts to notify you of any significant price changes or other important news, so you don't have to constantly monitor the charts. It's also important to remove reminders and notifications about new price data. These notifications can cause you to check the charts more frequently than necessary and can lead to impulsive decisions. By minimizing distractions and staying focused on your long-term goals, you can maintain a disciplined approach to investing and avoid the pitfalls of emotional decision-making. Another great tip to help you stay disciplined is to avoid hype and FOMO. Hype and FOMO, or the fear of missing out, can cause investors to make impulsive decisions that they may later regret. Instead, you should focus on your own financial goals and risk tolerance and invest accordingly. Do you want to let the excitement of a hot new coin or the fear of missing out on potential profits drive your investment decisions? If you find yourself feeling pressured to invest in a particular coin because of the hype surrounding it, take a step back and assess the situation objectively. Do your own research on the coin and determine if it has a good fit for your portfolio based on your financial goals and risk tolerance. Remember that investing should be a long-term strategy and that short-term price movements are often unpredictable. By staying disciplined and avoiding the hype, you can make more rational investment decisions and increase your chances of long-term success. To build discipline like a pro investor, you need to control your environment. This means eliminating distractions and minimizing temptations that can cause you to deviate from your investment plan. One way to do this is by reducing exposure to financial news and social media. Constantly seeing updates on price movements and investment strategies can create a sense of urgency and cause you to make impulsive decisions. Take a break from these sources of information to stay focused on your long-term goals. You can also minimize contact with individuals who are not supportive of your financial goals. This may mean distancing yourself from friends or family members who are constantly pressuring you to invest in certain coins or who are discouraging you from investing at all. It can be challenging to say no to these people, but it's important to prioritize your financial well-being and protect yourself from negative influences. By controlling your environment, you can stay focused on your long-term financial goals and make more rational investment decisions. This may mean taking a break from social media, limiting your exposure to financial news, or distancing yourself from negative influences in your personal life. These steps may seem difficult at first, but the long-term benefits of staying focused and making rational investment decisions are well worth the effort. Remember that building discipline is a journey that requires ongoing effort and commitment. By taking proactive steps to control your environment, you can create a foundation for long-term success in investing. Another great tip to help you stay disciplined is to expect volatility and stay calm. Volatility is a natural occurrence in the market, and it's important to be prepared for it. By expecting volatility, you can avoid making rash decisions based on fear or greed. Stay calm and assess the situation objectively. Ask yourself if the current price drop aligns with the coin's fundamental value, and if it presents a good opportunity to buy in. If it does, consider adding more of the coin to your portfolio. This approach can help you take advantage of lower prices and potentially increase your returns. Remember that short-term price movements are often unpredictable and influenced by factors beyond your control. Stay focused on your long-term goals and trust in your investment strategy. By staying calm and objective during volatile times, you can avoid making emotional decisions that could negatively impact your portfolio. Another great tip is never overinvest. Overinvesting can be a costly mistake that can derail your financial goals. It's important to strike a balance between being fully invested and holding too much cash. Consider your risk tolerance, time horizon, and financial obligations when determining the right amount to invest. Diversification is also key to staying disciplined. Don't put all your eggs in one basket. Instead, spread your investments across different coins and asset classes to reduce your risk exposure. By diversifying, you can mitigate the impact of any single coin's poor performance on your overall portfolio. Remember that investing involves risk, and there is no guarantee of returns. Stay focused on your long-term goals and trust in your investment strategy. Avoid making impulsive decisions based on short-term market fluctuations, and stay committed to your financial plan. And finally, we have review regularly. It's important to review your investments regularly to ensure that they are still aligned with your financial goals and risk tolerance. This can be done on a monthly or quarterly basis, depending on your needs. During these reviews, you should assess your investment performance, rebalance your portfolio as needed, and make any necessary adjustments to your investment strategy. It's also important to keep up with market trends and economic changes, as they can impact your investments and require adjustments to your strategy. You can stay informed by reading financial news, following industry experts, and attending investment seminars or webinars. By staying informed and reviewing your investments regularly, you can make data-driven decisions and avoid making emotional changes that could negatively impact your portfolio. So there you have it, 5 actionable tips to help you build discipline like a pro investor. Remember that building discipline takes time and effort, but the benefits of long-term success in investing are well worth it. Thanks for watching, and happy investing.